What's good, man? What's good, YouTube? Today, I ain't gonna hold y'all, man. We're gonna get straight into it. We got to talk about an important metric. We're going to get real busy in 2025, real busy, and make sure you stay to the end of the video because after I give y'all the game, the meat and potatoes, then I'm gonna give y'all the resources to make it a little easier on y'all. But tonight, we're gonna talk about earnings per share. Earnings per share. We're gonna be talking about a lot of metrics. We're gonna be talking about a lot of metrics. If you're tapped in with this channel, you're going to learn the fundamentals of investing. You're going to learn what the financials are. You're going to learn how to research the financials. You're going to know how to look at a company from an investor standpoint, how to analyze, how to break down the numbers, what these metrics mean. And today we're going to start with earnings per share. Earnings per share is a great metric I like to use. It's a great metric that's good for me to determine, is a company profitable? Is a company profitable? Are the financials strong? And then once you get into earnings per share, you can start getting into PE and a lot of different things. We ain't gonna talk about that right now. Right now, what we're gonna talk about is EPS, earnings per share. Earnings per share. And if you don't mind, I got some notes on me because it keeps me contained. Because if not, I'll get the yapping. I'll get the yapping. So I got some notes on me. I hope you don't mind. Let's get into this. So earnings per share. We're on Investopedia. Investopedia is a great resource I've told you about many times, and it's an amazing resource, an amazing tool. It doesn't matter how long you've been in this game, you never know everything, and you might need to go refreshen up and sharpen them tools. You got me? So, what is earnings per share? Earnings per share, also known as EPS, is a measure of a company's profitability that indicates how much profit each outstanding share of a common stock has earned. It's calculated by dividing the company's net income by the total number of outstanding shares. The higher a company's earning per share, the more profitable it is considered to be. Now, as you can tell, they just told you two metrics that you need to get to earnings per share. You need net income and you need to know the outstanding shares. One more thing you may need to know on a company to company basis, because every company, this doesn't this doesn't this doesn't apply to every company. So if that company does have preferred stock and they do issue preferred dividends, then you would also need to subtract the preferred dividends from that net income, and then you would divide that number by the outstanding shares, and then that will give you EPS. If that company does not have preferred stock and does not issue preferred dividends, then you would just need the net income and you would divide that by the outstanding shares, and that will give you your earnings per share. So let's just see what they got for us before we get into a little more key takeaways. Earnings per share is a company's net income subtracted by preferred dividends, like I yes, and then divide that number with common shares it has outstanding. Earnings per share indicates how much money a company makes for each share of its stock. That's good. Remember, I told you EPS can tell you the corporate value of a stock, the profitability of a stock. We want stocks that have a higher earnings per share. We do not want stocks that have a low earnings per share or a negative earnings per share. You see what I'm saying? That mean that company is not That mean that company is not profitable. Their financials aren't there. And it's not a financially strong company. It's not a financially strong company. So like they said, a higher EPS indicates greater value because investors will pay more for a company's shares if they think the company has higher profits relative to its share price. So you want to know you want to know what that EPS is. You want to know what that EPS is, and you want to know how you come to that, so you'll know exactly what it is. So when we're talking, remember we talked about the formula. We talked about the formula and what goes into EPS. They said net income. Okay, how do we get to a company's net income? Well, you would find, and this is why I talk about earnings reports and why it's so important to look at these earnings reports. And if you didn't listen to the earnings reports, then I have some more resources for you where you can go and get these numbers that you need to be able to plug into this formula and get your earnings per share that I'll tell you at the end of the video. So, earnings per share, you need net income. You need net income. So, to get net income, we're going to take the total revenue that company made for the quarter. We're going to take that total revenue and we're going to subtract any business expenses, any business cost, the cost of doing business. We're going to subtract that from the total revenue. So let's just make it simple. Say The company made a total revenue of $50 million for the quarter. They made 50 million, and expenses and business costs costed the company 20 million. And let's just say they had a preferred dividend of 5 million. No, I'm tripping. I jumped the gun. So net income, that company expenses and cost of doing business was 20 million out of the 50 million. And then we gotta account for taxes. And then you take, say we have $5 million in taxes. So remember, we had a total revenue of 50 million, we had 20 million in business costs and expenses, and we had an additional $5 million for taxes. So now we're left with $25 million. That's going to be our net income. That's important to differentiate the total revenue from the net income. Those are two totally different numbers. You have to subtract the business costs and expenses, and you have to subtract the taxes to get to your net income. Once you have that net income, you're going to find out, does this company issue preferred stock? Do they have preferred dividends? If they do, find out what that is and just subtract that from the net income. If they don't, you're good. Just take your net income that you got, and now we're going to take that net income and we're going to divide that by the outstanding shares. And some of the tools I'll tell you about at the end of the video, you'll be able to use those to find outstanding shares. How many shares are outstanding? You know what I mean? And when we're talking about outstanding shares, the outstanding shares are just the amount of shares that the company has issued that are out on the market, that are occupied, owned by investors. Those are the outstanding shares. You got me? So remember, net income minus preferred dividends, if there are any, divided by outstanding shares. Remember, we just told you how to get to the net income. You subtract those business costs and expenses, and you subtract those taxes from the total revenue, you have net income. You got me? All right. So once you got all of those figures, now you can plug them into the formula. You can plug them into the formula, and I wrote down an example here. So let's say Company A, their net income is $1 million. They have $1 million net income. And let's say they do have a preferred stock, so they issue $200,000 in preferred dividends. $200 in preferred dividends. So let's do the math. $1 million net income. We're going to subtract that 200,000 preferred dividends. That leaves us $800,000. Now, let's say company A has 500,000 outstanding shares. So we're going to take that 800,000 that we got from the $1 million net income, subtracted by the $200,000 of preferred dividend payments, and then we got 800,000, and we're going to take that 800,000 and we're going to divide that by the 500,000 shares outstanding. And what does that give us? That gives us an EPS of $1.60. Now that we have that EPS number, what does that mean? That tells us that company A made $1.60 per every share. So they made $1.60 per every one of those 500,000 shares. Now you may want to know, how do I know my math is right? How do I know that this number is accurate? Remember, we took our net income of $1 million. We subtracted the preferred dividends. They gave us 800,000. So you want to know if your math is right? You take that $1.60, you multiply that by the 500,000 shares outstanding. What's that say? That say 800,000. Your math is correct. Your math is correct. See, it's not that hard. It's not that hard. It's not that hard. It's easy. You see what I'm saying? So now that we have that, now you can tell, okay, this company, the financials is there. This company is profitable. They have a high EPS. I like that. I like that. Now, what are some things that an EPS can tell us, or what are some things that we can use, key things that we can use that EPS for? Well, we can use that EPS, like I just told you, to be able to determine the profitability of a company. Does that company have a high EPS or low EPS? You see what I'm saying? High EPS or low EPS. And the EPS can change based on different factors. If that company is buying back stock, that EPS can go up. If that company is issuing more stock, that EPS can go down. If that company increases its revenue, that EPS can go up. If that company decreases its revenue, that EPS can go down. You see how it's all connected. Another thing we can use it for is a comparison tool. Say there you're trying to decide you're looking into semiconductor chip companies. You're looking at Nvidia, you're looking at AMD, you're looking at Broadcom and others, and you want to know, okay, what is a good baseline for this industry? You pull up three or four companies, and let's just say these are just fictional numbers. Let's say you pull up four companies, and you have one has an EPS of $2. So you have two with an EPS of $2, one with an EPS of 4, and another with an EPS of $1. So now you can kind of quickly see that, okay, maybe $2 may be the average for this sector. A $2 EPS is what's average. Okay, this one has a $1 EPS that's kind of below average. Maybe let me look at this company and see, okay, why is their EPS lower than all the others? You get to looking into their financials, get to looking into you know, the company's business model, all of that kind of things to determine that why does this company have a lower EPS? And then these, okay, this is maybe about average. Now I want to know why this company had an EPS of a higher EPS of 4. Why does this company have a higher EPS? What are they doing differently? What are their financials looking like compared to all the other ones? See what I'm saying? Now you can determine, okay, this is about what's average for the sector, and you kind of know what to look for. So when you're looking at semiconductor chip companies, okay, I know that two, that's about average for the sector. I've looked through the sector. This is what's about average. So I don't want no companies that has an EPS of 1 or any negative EPS. We don't want that. You could say, okay, I may want at least 2 and up. I want an EPS of 2 and up. If this is the average, I may want an EPS of 2 and up. So you can use it as a comparison tool. And another thing, you can use it for market analysis. Like I just said, you can use it to say you're watching some companies you haven't pulled the trigger yet, and you're watching some companies and some earnings are coming out, and you see the EPS has risen on a company that you're watching. Okay, but all right, bet those the financials must be going up. Go and take a look at the revenue. Did the revenue go up? Did they buy back some of that stock? Looking to see it, look at the projections, look at the guidance, figure out why that earnings per share has gone up, figure out what caused that earnings per share to go up, because that's a good thing. I mean, that company is becoming more profitable. They have more corporate value. That stock may become more appealing to more investors, which could further drive that price up. If you're looking at a stock and that earnings per share is going down, same thing. Look at, okay, what made what made this company's EPS start to drop? Did they issue more shares? Did they miss some analyst projections? Is their revenue dropping? Did we have a change in CEO? Figure out why that earnings per share is dropping. So it can be a good market analysis tool. And this is why I wanted to let you guys know what earnings per share is, so that way you guys can become intelligent investors and be able to look at these metrics and not just see a number. You can see the number, and you can get a gauge on, okay, I see what's going on with this. This company got an EPS of $3 and say, okay, this, and if this is good. This company got a high EPS, it's profitable. Let me look into more. Let me look into more. Okay, this company got a low EPS or a negative EPS. I ain't gonna touch that right now. I'm gonna keep watching it. I'm gonna keep watching it. And remember, higher EPS represents higher profitability. Lower EPS represents lower profitability. You got me? EPS, remember, is earnings per share. See what I'm saying? Whatever that EPS number is, that's what that company is making per share. So if they got 500,000 outstanding shares, remember in our example, they have 500,000 outstanding shares. Our EPS was $1.60. That means for 500,000 shares, you want to know, how did they get to that 800,000 number? The net income minus the preferred dividends at 800,000, the $1.60. That's what they made per share. And you see how they got to that net income. So let me know if you got any value from this video. If you have any questions, let me know in the comments. And I'm still new to this. I'm still new to the YouTube thing. I'm new to teaching and explaining things, man. So if you got any Any guidance, any criticism, let me know, man. Do I need to talk slower? Do I need to go more in depth on certain things? Or I need to make a video following up on this, following up on that? Did you gain value from it? Did you gain value from it? Let me know in the comments a metric that you may want me to do a video over, a term that you may want me to do a video over. If you have any questions about investing and looking into financials and looking over the projections and analyst ratings and all of the stuff that goes into the stock market, let me know in the comments, man. Please like, share, and subscribe. Thank y'all for tuning in. Thank y'all for tapping in with me. I see y'all in the next one because we definitely got some more coming up, man. We got a lot to talk about. Oh, whoa, 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 whoa. I almost slighted y'all. Almost slighted y'all. I got to give y'all the tools. All right. So this is Yahoo Finance, NVIDIA, one of my favorite companies. So you see the price of NVIDIA is dropping. We love to see that. We love to see that so we love them cheap prices. But that's not what we want. This is what we want down here. This is what we want down here. Quick. Quick. Now that you know how to find EPS, what do you see? Earnings per share is telling you the earnings per share for NVIDIA is $2.53. NVIDIA is making $2.53 on every share outstanding. You see what I'm saying? Now that you know, now you can just come here quick and get it. You can also go to a place like Stock Analysis and get some great information. So this is just a quick, easy tool. If you want to come to Yahoo Finance and know what the EPS of a company is, you hear about a certain stock, you hear about this, you hear about that. You want to know, okay, I'm learning, man. I'm getting better at this investing thing, and I can go look real quick and see if this company is good, this company is profitable. Just a quick glance. Not the end all be all, but this will give me an idea. I can come and check out their earnings per share. $2.50, 53 cents. Okay, that's not bad. Remember, I told you we can use that to kind of compare. Let's look at AMD. AMD, their earnings per share, $1.13. We look at Broadcom. What's their earnings per share? $1.30. So you see that dollar and some little piece of change, that might be the average. That might be the average for some of these stocks. And Nvidia may be the outlier, may be the high one I was telling you about. Let's look at TSM. Okay, TSM. Sheesh, $6.15. That's a big dog right there. You see what I'm saying? $6.15. That's a profitable company. That's what we want. That's what we want. And that's just one metric that we look at because we also have to look at some other things to determine if it's the right time. That's another thing. Yeah, a company may be profitable, but is it the right time for me to get in? And those are more things that we'll talk about and that we'll get into because as you can see, there's a lot of metrics to get into. You got PE ratio, you got forward dividend and yield, beta, then you can go into forward PE, trailing PE, you know. What else? You come down here, can get into some year-to-date returns and compound annual growth returns and see trailing P, forward P, profit margins, ROA, ROE, ROIC. There's a lot of different things. Research analysts, projections and price targets. There's a lot of things to get into. There's a lot of things to get into. There will not be a shortage of content to go over, and I'm going to keep giving you the game, man, so that you can be a smart, intelligent investor and actually know what you're looking at when you're looking at these numbers so that you can have discernment and confidence in the market when you're investing in these different investments and looking at these companies and knowing which ones to get into, which ones to not get into, which ones you may want to wait and sit back. You may see a company, okay, the earnings per share is decent, but I'm gonna sit back. I'm gonna sit back and I'm gonna wait till the earnings report. I'm gonna wait till the earnings report and wait till some more figures come out. I'm gonna wait till some more numbers come out, get some guidance, get some new numbers and see did that earnings per share increase, did it decrease? Just to make me feel more comfortable that I'm making the right choice, that I'm making the right decision. And those are the type of things that you want to have in your toolbox so that you can make those type of decisions. You got me? But I see you on the next one, man. Tap in with your boy.